the national debt finally shot above $32 trillion. Now, at the moment, there is no ceiling on this debt. The sky is the limit because they suspended at least until after the 2024 presidential election. So who knows how high this number is going to be. But what's really significant, it's not just the size of the debt, but what's really growing exponentially, interest payment on the debt, which are over $600 billion according to nationaldebtclock.org. I have a feeling that it's actually more than that, because if you look at $5 billion, that still represents less than percent interest on the $32 trillion national debt. Now, I know a lot of that debt financed at very, very low rates, but every month that super low yielding paper matures and it has to be replaced with 5%. And just think about what will happen. Let's say interest rates just stay around 5%. I think they're headed higher, even if they dip a little bit first. I think 5% is going to look low. But let's just say rates stay around 5%. The national debt is going to be 40 trillion, a few more years, right? Not that many. At 5%, because by the time the national debt is 40 trillion, the whole thing would have rolled over. There'll be no more of that 25 basis point debt on the Fed's balance sheet or on the government's balance sheet, or it'll all be gone. So if you figure the government ends up paying 5 on a $40 trillion national debt, that's $2 trillion a year in interest. That is more than triple current $600 billion. That's more than we spend on Medicaid right now. That's more than we spend on Social Security. It's actually about what we spend on Social Security and national defense combined. And that's just interest. That's $2 trillion. But another very troubling fact should be that even if we could balance the budget without interest, meaning that the government collected enough in taxes to pay its bills, not counting it, even if the government could do that, we would still have a deficit of $2 trillion a year. It can't. If you look right now, federal tax revenue is about $4.7 trillion. Spending is $6.3 trillion. Even if you subtract the $600 billion for interest on the national debt, you still have an operating deficit of $1 trillion. Even if there was no national debt and no interest to pay, we still have $1 trillion deficit, budget deficit every year, adding to the national. So that means if the government can maintain that $1 trillion deficit, which I doubt it can do, it's about to skyrocket as the economy, collapses into recession, or a deeper recession we got now. But even if we can maintain that, that means when interest on the debt is $2 trillion, the annual budget deficits will be $3 trillion a year. I mean, this is, going ballistic. Clearly, an accident is about to happen. We cannot continue this. And in fact, if you look at the rate in which we are currently racking up debt, when Biden took office about 2.5 years ago, since then, the national debt is up $4.25 trillion in 2.5 years. But it's now going to accelerate at a rapid pace. Now, Donald Trump currently holds the record for most debt accumulated in a single presidential. He didn't accumulate the most debt of any president. That dubious distinction goes to Barack Obama. But Barack Obama served 2 terms. Trump only had 1. Now, of course, Barack Obama broke the record that was set by George W. Bush, had the 2 terms before him. He had the record for the most debt. I mean, he doubled the debt, and then Biden doubled the debt again. Trump wasn't in office long enough to double it, but he did set a record for the most debt in a term. I think Biden can beat that. I think that Biden in his first term, and hopefully last term, only term, but in this term, based on what I think is going to happen to the deficit in the next year and a half, and interest on the debt, he is going to break the Trump record, which is very significant. Because remember, Trump's deficits were heavily skewed in his last year based on all the stimulus from COVID. All of the PP money and all those stimulus checks caused deficit to skyrocket in 2020. And so Biden, didn't have that. Yet he still is likely to preside over a bigger increase in the national debt. This is a fiscal powder keg. All it needs is a fuse and it's going to go off. And I think it's got to be this next downturn that is coming. I mean, the global economy, everybody is feeling impact of rising. We're in like the lull before the storm. Although there was news over the weekend out of China, the Chinese economy growth is slowing, unemployment is picking up. In fact, they even had some rate cuts already in China to try to stimulate the economy. This is just the beginning. But these problems are worldwide because of 12 years of artificially low interest and the malinvestments and bubbles and debt that were a byproduct of that era. As rates have been allowed to rise, all of those mistakes are rising to the surface, and we're just beginning to experience the consequences. There is another leg coming very quickly in the financial crisis here in the United States, in the banking crisis. Now, you wouldn't know it by looking at the stock market, right? I mean, yeah, the Dow was down a couple hundred points today, 250, but Nvidia made a new high, right? So hey, everything is great. And the tech stocks, the Nasdaq was down a little bit, but not as much as the broader market. They're still piling in these stocks as if everything was great, but everything isn't even close to. And I think what's going to happen as we see the weakness in the economy and at the same time an uptick in inflation, which is very close around the corner, looking at various prices, you see that curve is bending up as the economy is headed down. That is going to put enormous pressure on the deficits of the United States and more downward pressure on the dollar. The dollar to me is still looking, it's not rallying on all this talk of tight money and an aggressive Fed. The dollar is not getting it. But all this stuff, I think, is going to be a perfect storm to really blow up that fiscal time bomb that is so apparent. And when you look at what just happened with the deficit, suspension of the debt ceiling, the creditors are figuring this out. The de-dollarization is not just about the sanctions on Russia. It's also about the enormity of the debt and the fact that our creditors want out. They don't want to be aboard this ship when it sinks.